Strategy number 10, that is SMA 5, 8 and 13. Now previously we have seen information regarding EMA, right? That is exponential moving average. We have seen that EMA is more reactive as compared to that of SMA, and traders will use EMA 20 for intraday trading. Why? Because price will always try to react to this EMA level. Price will always try to react to this EMA 20 level, right? But for this particular strategy, we are going to use SMA, that is simple moving average, and the duration is going to be 5, 8 and 13 days. The duration is going to be 5, 8 and 13 days. And previously, the time frame which we were working on was 5 minutes, right? On all the strategies which we discussed earlier, the time frame was of 5 minutes. But for this particular strategy, the time frame is going to be 1 minute. It's going to be 1 minute. So according to our strategy, that is SMA 5, 8 and 13, we are going to do scalping. We are going to do scalping. So if you are new to this market, this term is going to be very much new to you. It means scalping means you are going to stay in a particular trade for a very less duration of time. Okay, maximum to maximum 5 to 10 minutes is going to be the maximum duration of time for a particular trade. Okay. So this strategy is going to be beneficial to scalpers who believes in taking profit in very less duration of time. Or suppose if you are doing a job and if you can't stay in front of screen for a long time, then also this strategy is going to be helpful. That is SMA 5, 8 and 13. So let us see more information regarding this strategy. So as I have said, extremely useful for scalpers. This strategy is going to be extremely useful for scalpers. Scalpers mean those traders who believe in taking profit in very less duration or less duration of time. Okay, they will stay in a particular trade for maximum to maximum 5 to 10 minutes or maybe less than that. So scalpers, what they do, they will enter a trade in minutes, and if they get a profit, they will exit within minutes. They will take huge quantity like 1000, 2000, they will take 1000 to 2000 of quantity, and even if there is a change in price of 1 or 2 points also, then they will exit with the profit. Okay, and in this strategy, as I have told you, the time frame is going to be of 1 minute instead of 5 minutes. Okay, so extremely useful. This strategy is going to be extremely useful for scalpers who want to earn profit within minutes, and the time frame which we are going to use is of 1 minute. This particular strategy will give you lots of trading signals. Okay, this particular strategy will give you lots of trading signal. Every now and then it will give you a signal of buying, or it can give you a signal of selling, but some of them are false signals. False signal means, suppose if this strategy is giving you a buying signal, if this strategy is giving you a buying signal, and if you are entering at a buying position, you are expecting that the price will go up, and after going up for some time, it will then come down, it will then hit your stop loss, and then it will start going at your favor. Okay, so this is called as false signals. False signal means, suppose if a strategy gives you a buying or selling position, suppose if it gives you a buying position, you will enter at a buying side, right? And you will expect that the market will try to go up. It will go up for some time, then it will come down, then it will hunt your stop loss, and then it will again try to go at your favor. So this is nothing but a false signal. So this particular strategy, it gives lots of trading signals. No doubt it gives lots of trading signals, but some of them are false signals. And I recommend this strategy to only those traders who are seeking profit within minutes. So scalpers, if you are a scalper, if you believe in taking profit within minutes, this strategy is going to be helpful to you. Or if you are doing a job, if you don't have time to sit in front of screen for a long time, then also this strategy is going to be helpful. So next we are going to see how we are going to take our trade using this particular strategy and what are the criteria which needs to be followed. Okay, so let us see how we are going to take our trade. Now let us see how we are going to take our trade using this particular strategy. Now, according to this strategy, what we are going to do, we are going to wait for the candle to close above or below these moving averages. And this moving average is nothing but 5, 8 and 13 day SMA, right? According to this strategy, we are going to use 5, 8 and 13 day SMA. Okay, so these are the moving averages which we are going to plot on our charts. So basically there is going to be 3 lines which is going to be formed in our chart. There is going to be 3 lines which is going to be formed in our chart. So what we are going to do, we are going to wait for the candle to close above these 3 lines or below these 3 lines. So suppose if the candle has closed above these 3 lines, when we are going to take a trade, only when the candle breaks the high of this candle. Only when the candle breaks the high of the candle which has closed above these 3 lines. Okay, so this is going to be our entry candle. This is going to be our entry candle. Same way, suppose if the candle has closed below these 3 lines, when is going to be our entry candle? Our entry candle is going to be the candle which breaks the low of this candle. Okay, the candle which breaks the low of this candle is going to be our entry candle. This is going to be our entry candle. Now make sure that after the candle has closed above or below these 3 lines, suppose if the candle has closed above these 3 lines, when we are going to enter a trade, only when the high of this candle is broken. Am I right? The candle which breaks the high of this breakout candle is going to be our entry candle. But suppose instead of breaking the high of this candle, suppose if the next candle breaks the low here, suppose if the very next candle breaks the low of this candle, it means that we are not going to use this strategy. It means that this strategy has failed. Same way, suppose if the candle has closed below these 3 lines, instead of breaking the low of this candle, we are going to enter only when the candle breaks the low of this candle, right? So suppose instead of breaking the low of this candle, suppose if the next candle breaks the high of this candle. Instead of breaking here, if the next candle breaks the high of this candle, it means that this strategy has failed and we are not going to use this particular strategy for that. Okay, so I hope you understood the criteria when we are going to enter our trade. Only when the candle closes above or below these 3 lines, that is going to be our first criteria. The candle which closes above or below these 3 lines, that is the moving average 5, 8 and 13 day. And the candle which breaks the high of this candle is going to be our entry candle. Okay, this is going to be our entry candle. Same way, the candle which breaks the low of this candle is going to be our entry candle. And when not to take our trade, suppose instead of breaking the low, if the next candle breaks the high of this candle, it means we are not going to take our trade. Same way, instead of breaking the high of this candle, suppose if the next candle comes and breaks the low of this candle, okay, it means that we are not going to take our trade. Okay, now what will be the target and stop loss for this particular trade? What is going to be the target and what is going to be the stop loss? Our target and stop loss is going to be very much different for this particular trade. But before that, I hope you understood the criteria how to take our trade. If not, please go back to the video. And still, if you are finding any troubles, you can message me anytime and I would be happy to help you. So what is going to be our target? For this particular strategy, it is highly recommended that you keep a specific amount as a target. Why? Because in this strategy, we are scalping. It means we are not going to stay in the market for more than 10 minutes. Right? According to our strategy, we are going to stay in the trade or in a particular trade for maximum 5 to 10 minutes or even less than that. Within minutes, we will try to exit our trade within minutes. So for this particular strategy, because we are going to do scalping, it is recommended that you keep a specific amount as your target. Or if you can't think of a specific amount, you simply multiply your quantity. Suppose if you are taking 50 quantity, you multiply the quantity with 10. So what is going to be the answer? It's going to be 500, right? So this is going to be your target. 500 is going to be your target and your stop loss is going to be half of your target, that is 250. 250 is going to be your stop loss and 500 is going to be your target. And you need to strictly follow this target and stop loss. If you get your target, immediately exit your position. If your stop loss gets it, immediately exit your position. Why? Because we are scalping. We are going to exit the market within minutes. That is maximum to maximum in 10 minutes. We are going to exit our position. Right? So suppose if your quantity is 100, what is going to be your target? It is going to be multiply by 10, that is 1000. Your target is going to be 1000. Your target is going to be 1000 and your stop loss is going to be half of the target, that is 500. Right? So if you can't think of a specific amount, I highly recommend you that you follow this. Multiply your quantity with 10, that is going to be your target, and divide your target with 2, that is going to be your stop loss. Okay? So I hope you understood what is the criteria which needs to be followed in order to take your trade and how we are going to set our target and stop loss for this particular strategy. So next we are going to backtest this particular strategy on the previous data and you will understand the concept more clearly. Okay, so see you in the next lecture where we are going to backtest this particular strategy.